Traders, you can follow me at Gumby9662C. Like the video if you like it, and I appreciate all the comments you can give me. I wanted to start with the home builders because this is the one area that I had mentioned that I thought we might start seeing some relative outperformance. Well, today, we actually got a island top on the home builders, so that may not be the case. So we actually might see a topping pattern going on here in the home builders. I just on a relative performance basis, we tried to break out on it and have a outperform the home builders versus the SPY, and today they're underperforming. So just keep this one watch. Home builders are really underperforming here. Another area of concern, and that's your materials versus your SPY. We kind of have a bear flag going on relative performance. The materials versus your SPY. It looks to me like money is starting to rotate out of materials sectors. So keep that in mind. This will include some of your oil stocks and your coal. Some of the materials I think gold and silver is lumped in there, and some of your chemicals. So keep that in mind, that money might be coming out of materials. Another area of concern here, and that's your energy sector. We have this downtrend, which your indicators on energy, it wouldn't take much to really send the energy taken to the north side, but we have got massive builds of inventory, and I don't see any reason why we're going to have draws on that inventory. And if Russia is already breaking the trade agreements, this is bear flagging on a relative comparative chart here. So just keep that in mind, that energy is the most bearish major sector right now. Now, on the flip side, we have a downtrend here on the healthcare sector, which has been lagging most of the year. And right here, right now, we are testing the downtrend on the relative performance versus the SPY. So just keep this in mind. This has been uptrend. It's been uptrending. It's been outperforming the SPY for a while, the healthcare. But we are at a resistance level for healthcare on a relative basis. Given this chart pattern in healthcare, I cannot argue the fact that it may have more room to go, but especially with today's candle and stuff. We do have quite a bit of spread between the momentum and the momentum line. But I'm telling you, there is reason to believe that there is some resistance for higher prices in healthcare at this level. Your industrials are pretty much trading with SPY, so if SPY decides, or S&P 500 selling off, your industrials are going to go with it. So just keep that one on your radar. Here recently, though, your industrials are the past couple of weeks, industrials have been leading a little bit on the S&P 500. So we do have a little bull flag on relative performance for your industrials. Your XLK, which is your technology index, it's kind of just flattened out versus your S&P 500. So it's kind of just trading with whatever the S&P does. Your consumer staples are slightly outperforming your S&P, suggesting that there's a little bit more rotation into more conservative areas. Your XLU, your utilities, correction, wait a minute. It won't let me do that chart right now. Your XLU has been catching a really good bid, despite the fact that the interest rates were supposedly going to go up with the Yellen speech. So it looks like it's bull flagging here for potentially higher prices. So this is contrary to higher interest rates. The XLU should actually be going lower. It shouldn't be going higher in a higher interest rate environment. Now, something to be concerned about, your consumer discretionary, and that's what people are going out and buying. buying and selling, we are right back to the beginning of the year lows, despite record highs on the markets. So this is very concerning here. We are threatening a breakdown of the year highs, or the year lows, and that, if we get weakness in oil here middle of the week and this breaks down, I mean, we could start seeing some significant downside pressure here. Your XRT retail index versus the SPY continues to make lower lows for the year. So just keep that in mind. It's in a full-fledged bearish downtrend and no sign of any change. Another pair to keep on watch here is your TLT versus your XLF. So far, the bullish pattern for the financials is still intact. If we break this trend line right here, that suggests to me we're going to get some weakness in the financials. And then I want to finish with your semiconductors. That's another leading indicator on the markets. And so far, the semiconductors are still in this up channel. And so it's approaching an area where you can take a bullish or bearish bet. I mean, typically you would take a bullish bet here on your semiconductors, especially with the shareholder meeting coming up with NXPI in the next few days. That's all I got to say on this video, and I hope it helps. And I do think there's some concerns with the consumer discretionary and retail and potentially oil too. That's all I got to say. Thanks a lot.